I've mentioned Bitcoin before in my videos, and that's because I've been a buyer of it since 2017. I have taken profits since then, but I still continue to accumulate Bitcoin, Litecoin, Ethereum, and I have Ethereum staked as well with Coinbase, and I also have their debit card. So I wanted to start doing some Bitcoin analysis on the channel as well, and so let's just open up a daily chart and have a look. Okay, so Bitcoin is not immune from market downturns, and it has been just dumping, as you can see. And what I want to really cover is the downtrend as it started from about the end of March. You can see that the price has just been stair-stepping down lower and lower and lower, and along the way it's formed a couple of chart patterns. So the first one that I identified just right off the bat, it was easy to find, was this ascending triangle. And there's a corrective uptrend through here that you can see with this green dashed line, and when this corrective uptrend broke, the price dove down. And there are a couple of gaps on either side of this pattern, which is probably a good omen that the price is going to come bouncing back up. So the thing about ascending triangles is they have a pretty generous percentage being price target, and on the way down, you're going to take 44% of the height of the pattern and apply it to the breakout price. And when I did that, I got a target of, what is this, 22,891, and pretty much that's where the price started to slow down once it hit that level, and is now bouncing, and it's touched that level again and seems to be heading down lower, ending this week with a doji. Typically this kind of a bullish doji is a bearish continuation pattern, and Bulkowski covers that on his website too. Maybe I just go there really quickly and show what I'm talking about. So if I type in bullish doji here, this is the patternsite.com. And this is where I do get a lot of my information. Bullish Doji Star. So Bulkowski is going to go ahead and he's going to give us his statistical analysis here. He says that's bearish continuation 64% of the time. It is supposed to be a bullish reversal pattern, but that's not the case, not at all. But it is possible that we'll get a morning star if the markets bounce on Monday. Hopefully Bitcoin will just continue to travel or to trade throughout the weekend and make this pattern. So let's go to the morning Doji Star candlestick pattern and show what that is really quick. This is best case scenario off of that Doji, of course, is to have a nice big green day, as you can see in that little icon there on the right. And this would be fantastic. Bulkowski says that the morning Doji Star is supposed to act as bullish reversal, and it does 76% of the time. So a good strong day on tomorrow, actually tomorrow, would be wonderful. That'd be great. And I think that that's very possible. Looking at the RSI, it is deeply oversold. It has been for a while. Remember that the indicators don't lead the price. The price moves. The indicators reflect what the price is doing. That just means that the average losses are bad. They're so bad that it's hard to make a dent in it anymore. That's how long the downtrend's been going. You can see that volume has decreased the last couple of days, and that could be good because that might be the end of selling pressure. The MACD, I'm going to blow it up here just a little bit. Histogram is bearish, and look at how far below zero the averages are. That's, going to be typical after you have such a long and prolonged downtrend. And this might be ready to reach peak bearish momentum soon. I want to say that these two lines are not looking like they're moving together, but they may begin to. There's just not enough information there. I think overall what the big takeaway is from this analysis is that there is a descending broadening wedge, and I've shown that by this blue line that runs down and at a steeper angle than the downtrend above it. And if you combine these two lines, these two trend lines, you get this descending broadening wedge, and that is a pretty good sign that the price is going to bounce back to the top of that pattern. Let me open that up. Descending broadening wedge. Yes, descending broadening wedges. Here we are. So Bulkowski has a page on just about every chart pattern you can imagine. This is what I'm looking at. If I blow it up a little bit, you can see that a little better, how it resembles that image on the right. I scroll down, and percentage of being price target for up and down breakouts. For up, it's 83%. This is pretty good. This is really good. That means that the overall height of the pattern, take 83% of that, and then you add that to the breakout price, and that's going to be your price target. But more often than not, it comes to the top of the pattern. So let's take the pattern ID here. He says it looks like a megaphone tilted down. Both trend lines slope downward. For proper identification, look for at least 5 trend line touches. 3 or more on one trend line and 2 or more on the other at minor highs and lows. Price cutting through a trend line doesn't count as a touch. That happens most at the start and breakout of the pattern. So there is a touch that does break through here. You can see that doesn't count, but we do have a couple of tails here that seem to be right in line with a couple of other tails down here. So I'm thinking 1, 2, and 3 touches on the bottom with 2 on top, maybe even a third depending on how tightly you want to draw it, but I don't think so. I think we just have the 5 that we need. And so to see the price now finding support along that bottom trend line is a good indication that we're going to move in the right direction. The volume trend should be upwards, and at the end of the pattern we are having more volume than before. The 30 period average volume towards the beginning of the pattern, I don't think I have that up, do I? I don't. But you can clearly see that volume was lower when the pattern started and is now ending higher. Now the measure rule, he says for upward breakouts, use the highest peak, A, in the chart pattern as the target. For downward breakouts, compute the difference between the highest peak and the lowest valley. You multiply the height, the percentage mean price target, and then subtract it from that lowest valley. So here we're going to have probably an upward breakout, hopefully, and we'll have the price travel all the way back up to 45,000. 45,000, that'd be great. There are some gaps here to fill, and if it takes 10 or 11 trading sessions to fill a gap, that would be a good time to bounce for Bitcoin. It really would right now. It's going to have to start happening first, though, of course. He says, buy at the third touch. When price touches the bottom trending for the third time, C.3, and begins rising, buy. Price may break out on the following trip across the chart pattern, which is to say on the way up to break out and above. And that's right where that gap zone is. So I want to say that we've had our third touch, and if Bitcoin can start to rise and actually get back above this ascending triangle target, that's going to be a good opportunity to enter into the cryptocurrency. So that's the analysis I have for Bitcoin right now. It's just a snapshot of what's to come. I want to go more in depth with the cryptocurrencies like Basic Attention Token and Ethereum, but I'll have to do that at another time. I just wanted to get another video together really quickly to try to solve and figure this audio-visual delay I'm having. So be sure to subscribe if you like the content and turn on notifications so you know when I post. Happy trading.